Hello and welcome to Investing Confidential. I've gotten comments recently, actually messages, people saying, who are you? Like, what's your qualifications of you doing these videos and talking about what you talk about? Well, so here it goes. I'm going to give you a brief understanding where I came from and why I'm doing what I'm doing. So I grew up in the New York area, lower middle class suburb, just regular place. Uh, I was fortunately good at sports. I'm not going to tell you what sport right now, but I was able to use sports and a decent grade point average to get into one of the most elite universities in the United States. Fortunately for me, after I graduated, I got into a training program with one of the largest investment banks in the country. I worked on a number of trading desks in both management, et cetera, for a little over 15 years for a number of the top investment banks, people like Merrill Lynch, Smith Barney, Bear Stearns. I worked for one of the largest banks in Europe, an Asian boutique. Always involved in international, right? In equities and fixed income. Always involved in specializing in emerging markets, and that led me to the transition to what we call on the institutional level the buy side, or you call asset management. Okay, I worked for one of the largest hedge funds and one of the oldest hedge funds in the U.S. at the time. My specialty was, again, investing outside the U.S. and specializing in developing countries. So that meant I traveled to China and Brazil and Mexico, Eastern Europe, all of these places, and I just want to make everyone understand the difference between working for a hedge fund and just a normal investment fund. It's, an absolute return versus a relative return. So your normal fund, the ETF you buy, or maybe a fund that you would get involved in. Hopefully, not someone like the ARC fund, but something like that. What they're trying to do is they're trying to beat an index. Okay, they're not trying to really make you money. They get compensated based on how many basis points, how many percentage basis points they beat an index. So if the index is down 40 and they're down 30, they get paid. It makes no sense, but that's how most of the asset management industry works. Whereas if a hedge fund, which is an absolute return vehicle, you're just trying to make money. You don't care what the environment is. The market's down 40%. You have to make money. And beating an index, again, versus always making a profit. To give you an example, I'm not going to brag, but during the financial crisis when most asset managers were down 40, 50, 60%. So we're up 4.5%, making a positive relative return versus everyone else, most people, losing money. And that's really a concept of going long and short versus just being long, which is what everyone else is. So, there's an art form about shorting stocks. Obviously, it's a lot more tricky now than it was before because of what has happened with all these meme names. And risk management really is a key, and understanding risk. So you're forced to really understand what's going on in the macro environment that's affecting not just your company that you're invested in, but also the currency, the government, geopolitical situations, et cetera. And so that's, all those years of experience, okay, I've been doing now 30 plus years, have given me sort of an insider's view of Wall Street, insider view of finance, how the banks do business, how they make profits. Okay, as you could say, I'm not a big fan of Wall Street, and I'll call them out almost every time because I like to read between the lines of what they're saying. I study my own data. I read prospectuses. I look at things that people don't. I don't pay attention to any headlines. The headlines to me are fodder. Okay, I show you the headlines, but then I give you what the real skinny is. I don't believe anything that any investment bank says, and I'm always going to be skeptical, and you should be skeptical as well. And at the end of the day, what I'm trying to do is give you something that, let's say, other YouTubers and TikTokers don't offer. Okay, why am I doing this? It goes back a few months ago as I was at a conference about financial communications. I met a bunch of financial YouTubers, had some conversations, talking to this 20-something YouTuber who had 500,000 subscribers, and all he talked about was real estate and crypto and other things. And I was talking to a bunch of them, giving my views on what's going on in the environment, and they just grabbed me and said, "You got to do a YouTube, dude. You know too much." I'm like, I kind of laughed it off. About a month and a half later, I kept thinking about it, and I saw what was going on in the environment. And I said, you know what? Maybe I'm going to try this out. So as you know, I've been only doing this now for a little over well, maybe 2 months at most. So please be patient. I'm new to this, but at the end of the day, I think I'm offering something that's a little different than what most of the people are talking about out there. So my goal of this channel is to make every investor awake and give them power to see through all the hype, all the bullshit, so to speak, and maybe hopefully make you look at things a little differently than you were before, and hopefully that'll help you um, save money as opposed to just always trying to make money. Sometimes when you don't do something and you save yourself from losing money, that's better than just doing things all the time and making mistakes and losing money. So anyway, that's it. And as I always say, for all you investors out there, be careful out there.